They literally do not owe you a doctorate. So, and I had a lot of crazy politics going on when I was getting my PhD. It was kind of a mess. And so anyway, so I appreciate Professor Caroli for that. And I mentioned him before. If you've kind of if you followed the podcast for sure on the Black Financial Channel, I've talked about contagion. Contagion was a word that was actually used to describe what was happening in the stock markets yesterday. Contagion was a big word for Professor Caroli because that was his area of expertise. So in my doctoral work, I read a lot of stuff about contagion because that was what my major professor was working on. And so effectively yesterday, that's what you had, what you saw. You kind of saw a financial version of the coronavirus, where way over in China, there were real estate companies that looked like they might not be able to pay their bills. And unbelievably, this crazy stuff happening all the way over in China is affecting the United States. It's affecting financial markets all around the world, again, due to financial contagion. And what's really interesting about it is that it's not as if the disaster has already occurred. It's not as if something terrible happened. Sometimes the market can move based on the fact that something terrible might happen. So stock investing is to kind of, since I'm a math geek, I think about it in mathematical terms. Stock market investing is it's a lower dimensional projection of a higher dimensional space. What do I mean by that? It means that, let's say that you're about to roll the dice, and you know that you could get 6 different numbers on the dice, and someone says, well, how much are you willing to pay for the right to roll this dice and to make this bet? Well, what you have to do is you have to factor in, you have to consider, like, what if I get a 1? What if I get a 2? What if I get a 3? What if I get a 4? You have to imagine all those possibilities at once and factor all that into your decision making, without knowing what the outcome is going to be. It's only going to be one outcome. It's going to be a 1, a 2, a 3, a 4, et cetera, right? But you have to factor everything in, all the possibilities in order to make a move. And that's really fun. I think that's a fun exercise mentally, because it reminds me of the Game of Thrones. There was an episode in the Game of Thrones where one guy was talking to the queen, and he says, you have to imagine every enemy as your ally and every ally as your enemy. And you have to think about all these things in terms of how you make your next move, right? So with this market right now, you have to imagine all the things that can happen. And what is created is what they call a wall of worry. A wall of worry is where you've got about 5 different things on the horizon, a very pregnant moment, so to speak, where something's going to be born. You don't know if it's going to be a boy, a girl, or a baby ant. You have no idea what's going to be born, but you got to prepare for all the possibilities. So when the market sort of did all that, right, and factored all that in, and then also factored in the biases that we have as consumers, that the ability, our appetite for risk, our ability to kind of process this. How are we feeling right now, right? Are we feeling nervous? Are we feeling very bold? Whatever. All these things come into play to determine what the stock prices should be today. And so what I'm really gathering right now is that you're in a market that it's really interesting, because this morning the stock market did what I thought it was going to do. It had what's called a reversal, right? It went up about 342 points this morning, and then it immediately lost all those gains, right? And that's after yesterday, where you had about a 600 or 700 point, I want to say 620 point decline in the Dow. And so what's really going on now, in my view, is that you have a scenario where people kind of know that the jig is going to be up at some point. They know that these months of easy money are going to have to come to an end. All good things must come to an end at some point. So on one hand, you've got some people who buy the dips, right? Prices drop, they start buying everything up. The market's been trained to buy the dips. But then you have a lot of people who are in the habit of selling the blips, meaning when the market goes up, they start selling. They say, oh, I better get out while the getting's good, because bad things are on the horizon. It's about to rain, so I'm gonna go ahead and go in the house and get my umbrella and call it a day, right? So effectively, I would argue that might be why you saw this big jump this morning, the big reversal because people bought the dips. But then when people saw it take off, they said, okay, this is my chance to get out before it gets messy. So one of the big things that's happening right now today has to do with the Fed. The Fed, today's Tuesday, the Fed is going to basically do, an announcement. Jay Powell, the chairman of the Fed, is going to come out and speak. And and when he speaks, it's kind of like a little cat and mouse game between him and the media, where they're literally listening to every word, hanging on every syllable, looking for any sign, any symptom that he's going to change something about the policy. And what he does is he tries his best not to send any signals unless it's a signal that he wants to send, right? In a way, it reminds me of this weekend when Alicia and I we went out to South Dakota, which like this big state full of white people, but they're very nice white people. They weren't mean to us or anything, but I think we saw like one black person the whole weekend or something, and I went and I decided, I said, hey, let me sit down and play some poker again. I haven't played poker in a while. I like poker. I think I'm actually pretty decent at it, and so I sit down and these guys, they had no idea, that I was good, right? They had no idea I'm a mathematician and a finance professor, so I can kind of do stuff in my head a lot of people can't do, I guess. And by the time we got done, I had taken like everybody's money, and I felt kind of guilty about it, because I don't know, I just felt kind of bad, and eventually I had to go. And I think about that because it's sort of like when you're looking at this market right now, it reminds me of sitting down and playing poker. One of the things about poker that makes it similar to the stock market, this is literally why Wall Street firms recruit a lot of poker professionals to come to Wall Street, is because poker players that are really good, and I would consider myself in that category. Like I've won tournaments with 1,000 people in it, stuff like that. Like when there's 1,000 people and you're number one, that means you usually know a couple things. You know your way around the table. And it goes back to that old Kenny Rogers song. You got to know when to hold 'em, know when to fold 'em. You know that song? Know when to walk away and know when to run. Well, with investing, it's sort of the same way, where you're playing this game where you have to know how to calibrate your risk, but also in poker, there's always this information thing. In poker, information is really important. That's how players get a read on you. That's how you get a read on them. That's how you decide what's going to happen. So it's a big game of espionage with information, where you're either trying your best not to send any information, or you're trying your best to send the wrong information. You're pretending to be weak when you're really strong. You're pretending to be strong when you're really weak. Or maybe you pretend to be strong because they think that you're going to pretend that you're just pretending, right? Whatever it is, right? And so what it does is it creates a scenario where information is king. Information is everything. In the stock market, and this is why I'm using the stupid, exhaustive poker analogy, is that in the stock market, information is the number one driver of stock prices. Information is everything. That's why, for example, if you trade stocks with inside information that the public does not have, they will send you to jail. That's why, what's her name? That white lady who makes all the Tupperware and whatever, who does the TV show with Snoop Dogg, Martha Stewart. That's why Martha Stewart is doing a TV show with Snoop Dogg, is because she was sitting on an airplane and somebody gave her a tip. A CEO that she knew sat with her and said, Martha, we're about to make a really bad announcement on the company next week, so you might want to sell your stock. Well, Martha acted on that stock tip, and because she had information that other people did not have, they traced it back to her and they sent her to jail. So with the markets, again, similar to the poker game, I want to make sure you understand this analogy and not think I'm just sort of just rambling here. Just like the poker game, information is king. And also, when you talk about the conversation between Jay Powell and the media, Jay Powell is the chairman of the Fed. They know that what he chooses to do is going to move the stock market. So when they're listening, Jay Powell is doing everything he can to manage information. He's trying to make sure that he doesn't send any signals that are going to rattle the market. And if he does send a signal, he sends it very specifically and very carefully, because any little word he says can make the stock market go up and down, right? And it reminds me when I play poker, because when I'm sitting there, I'm thinking don't release any information you don't want them to have. And if you do release information, make sure it's misinformation, right? So they think that I'm weak or I'm strong, whatever. And that's how I ended up walking away with all those guys' money. Those white guys were really mad because they thought the black guy was the stupid one. But you know what it is, right? So anyway, let me hop in here and read some of your questions. Actually, I know some of you submitted your questions in advance. And if you want to submit your questions in advance for class, just log in at theblackstockmarketprogram.com and you can send me your question. I will answer every single question that's submitted in advance. So Terrence Williams says, "Hey boys, what are your thoughts on the crypto trading platform TradeStation? Do you think it's reliable?" I looked up TradeStation for you, man, and I didn't see any red flags. I looked up reviews and all this other stuff, and I've never used TradeStation, but it doesn't seem bad. But there are a lot of crypto trading platforms out here. I don't know if you all know this, but what was it? I think Robinhood now has crypto wallets on the Robinhood app. I don't know exactly what the functionality is, but what I'm going to do is dig around and try to find out a little bit more about it, and I'll follow back up with you about that. So that's a development, and also we have a crypto investing club in the Black Business School. If you want to take a look, it's theblackcryptoclub.com, theblackcryptoclub.com. Bobby Morris, I want to apply my roundups on my stash account. Which link is better, instant verification or manual verification? Well, instant verification, for the most part, from what I understand about it, is that instant verification means that they can do automatic deposits and things like that. And also that, when you send money over, it instantly sort of pops over into your account. And also, those weekly deposits can be set up on autopilot, which is a good way to invest. There's some people who just set it and forget it. That's how they become very wealthy. They become what David Bach refers to as automatic millionaires. Automatic millionaires are basically people who invest on autopilot and consistently invest. And next thing you know, one day they wake up and they're just millionaires, like that Luther Vandross song, you wake up and suddenly you're in love, right? So how did that happen? Or maybe it's Lionel Richie. I don't remember who sang the song. It was a good song though, right? But so how do you wake up suddenly and you're in love? Or you wake up suddenly, you're in love with your bank account. Well, the reason that you woke up suddenly and you're in love was because you were doing all these little actions consistently pushing you in a certain direction and you didn't even realize it. And then one day you're like, whoa, I'm in love. How did that happen, right? Well, the same thing happens with financial love, right? When you are just sort of consistently doing little things with your money, you wake up one day and you have a realization, you have an epiphany, and you say, oh my God, look at how much money I have, right? Well, then some people go in the other direction, right? They consistently spend a little bit. It's like drip, 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 because they're always dripping, right? And they don't realize that all that dripping is a leak in their economic bucket. And then you wake up suddenly and you're broke. And I used to go through that when I used to work at Taco Bell. I don't even anybody ever go through that way. Remember back in the day when you would get your paycheck and you would like go to the bank and cash it and get like all cash. Then you would have like maybe $220 in cash and you have all these 20s in your hand and you would really think that you were like balling, like you would really swear in your head like you're never going to run out of money. At least I did. I would say there's no way. If I'm only spending $5 or $10 at a time, there is no way I'm going to run out of money, right? So I become real generous. And I'm loaning people money. I'm spending money on this, spending money on that. Oh, it's only $4. I've got $200, right? And every single time the same stupid trick would occur. The universe would play the same dumb little trick on me where I would just spend a little bit here and a little bit there. And I always would wake up one day and be like, damn, where did my money go? You reach in your pocket and you realize you only got $13 left. And now you're starving up until payday again, right? So some of us never lose that habit. Some of us continue to do that even, in adulthood, right? Forget Taco Bell and being a teenager. Some of us do this when we're 40, 50 years old. And the thing about it is that that's a habit you don't want to pass to your children. You don't want your children to be infected with that psychological disease. You want them to have what I refer to as economic consciousness. You want them to be economically woke. You want them to have economic awareness. When people talk about wokeness and being conscious, what is consciousness? Consciousness is awareness. I know what's going on. Like, I'm not going to wake up suddenly and be in love or wake up suddenly and be broke. No, I'm conscious. And this really applies to everything. I kid you not. This is, if you want to know how I think about investing, when you study it as much as I do, you realize everything's an investment. Me getting up this morning and talking to you is an investment. You getting up and listening to me is an investment. Me spending time with my kids is an investment. When you go and you go to the gym today, that's going to be everything's an investment, right? Most investments don't involve money. And so to me, consciousness means that I'm very conscious of what I'm investing in and what I'm not investing in. You know, when you talk about buying black, that's where the word consciousness really comes into play, because what I'm basically saying is be very conscious of where you put your money. Because if you're not conscious, you're just going to throw your money here, throw your money there. You're not going to care, you know, who you bought it from or where it came from or what ingredients are in it. You're being conscious, right? You're being aware, right? So same thing is true with love. Love is probably the biggest investment that you'll ever make. If you ever want to ruin your life, you know, just go out and have a really horrible relationship. Like get you a couple of ridiculous baby daddies and then see how quickly that spirals your life out of control. Or go get some horrible women pregnant and see how quickly that puts you in a position where you're very vulnerable financially, right? So that consciousness means that I'm going to really be aware of you before I even go on a date with you. I'm going to be aware of you of what's coming before I even give you my phone number, right? I'm going to be aware of you because, like, as a married man, I have to kind of say, okay, I'm conscious of my marriage. So no, I see how pretty you are. So that's why I need you to stay over there. That's why we're going to talk on the phone. We're not going to meet for dinner, right? So ultimately, what you have to do is have a type of awareness when it comes to your economics. And when you have that awareness, that's how you avoid that whole, I just spend. One day I wake up and I'm broke and I don't know how I got there. You should always know how you got there. No matter what it is in life, you should always be aware of how you got there so you can figure out how you can get to the place that you want to be. That consciousness and that awareness, that's the beginning of everything, right? And so I want you to expand the definition of what it means to be conscious. Expand the definition of what it means to be woke. When I'm awake, I'm aware. When I'm asleep, I don't know what's going on. A big chunk of our society is asleep. That's why the sheep fall off the edge of the cliff, and then they don't have any idea how they got there. Okay, so let me look at a couple other questions here. Let me see. Another question is from. Okay, Terrence says, can you explain what it means when I try to purchase shares of a company in Robinhood during the week after markets open, just to get a message that says extended hours volatility? Okay, I get it. So what you're talking about is extended hours trading. So what Robinhood does is Robinhood lets you trade not just during the market hours from 9:30 to 4. You can actually trade during extended trading, the extended trading period, which is 9 to 9:30 a.m. Eastern. And also the extended period on the end is 4 to 6 p.m. Eastern. So that gives you an extra 2.5 hours a day where you can buy stocks before the market's open and after the market closes. Now, this is a different market. The reason they're warning you about the volatility is because in this extended hours market, there are not nearly as many participants. And what that does is that creates certain dynamics in the market that make stock prices move a lot more than they normally do, right? That's what volatility is. Volatility is just chaos and, prices jumping around and stuff like that. So what they're kind of just warning you about is like, look, this isn't the way you trade during the day because it's after hours and there aren't that many people around. We're gonna have a harder time matching buyers and sellers, which means that we're gonna have to adjust the price a little bit more than normal in order for the trade to go through. But extended hours trading is something you can have in case you want to buy or sell stock, maybe in reaction to a company's earnings announcement. Companies sometimes announce their earnings deliberately after the market closes in order to what am I trying to say here? In order to minimize the amount of price movement, right? So a lot of companies, if you pay attention, a lot of companies announce their earnings like right when the market closes because they don't want the market to freak out and go crazy in case they don't make their numbers, right? So a lot of times, this extended hours trading allows you to react a little more quickly to what's going on. By the way, I want to mention everybody, in case you live near Baltimore, I'd be remiss not to mention that on Saturday, I speak for Reality Speaks and Conscious Heads Barbershop in Baltimore, and we're going to talk about the Black business mindset. And so if you live in the Baltimore area, or if you want to fly in or drive in or take the bus and whatever the case may be, feel free to go meet me in Baltimore. You can go to drboycebaltimore.com to get information. That's drboycebaltimore.com. And of course, you guys know the All Black National National Convention is going to be the weekend of October 29th. And I want to emphasize that because what we did was we're very solution oriented. This is not just a convention to get together and scream and holler. This is when we're actually having meetings and we're planning the future of our community. We're talking about everything from property acquisition. Julian Gordon, one of the great real estate experts in the country, is going to be there along with Jay Morrison and some others that know how to buy the block. Also, we're going to have people like Queen Afua. I'm still talking to Queen Afua. I believe that we're close to making a deal about getting Queen Afua down there to talk about health, and Farmer Brown, the MC, about growing your own food. We've got people there that can talk to you about, of course, things like crypto and all that. Teddy Ewing, Dot Montgomery, some crypto experts. But then also we have people like Jade Arundel and Vicky Dillard from Fly Nubian Queen. So really, if you're interested, come on down. Go to allblacknationalconvention.com if you'd like to go and take a look at tickets. We hope that you'll bring your family or your group, right? Because we like to do things in groups. If you invest in groups and you make moves in groups, it's just like you talk about slavery, escaping the plantation. What's easier to, try to run away from the plantation by yourself, where you're out in the woods all alone and you don't know your way around, you don't know how to build a house, you don't know how to survive? Or is it better to go as a group where where everybody has a skill, everybody's bringing something to the table so you can all help each other survive, right? So that's what we're saying. So in order for us to really elevate and escape the plantation, all this other stuff, I believe that we should do this in groups. So if you come to the convention, I encourage you to bring groups. We have group discounts. So don't worry about the price. Go to allblacknationalconvention.com. You can even talk to our team and we can work something out with you if you want to bring a group of people. Okay. So let me hop in and finish up the next question here. Let's see. Artez says, in general, for a 401k or IRA, what are some rebalancing strategies to help mitigate an expected downturn in the market? Well, when you're talking about an expected downturn like this, I know that I personally own a little bit more gold than I did before. I think diversification is critical. You got to be careful with the meme stocks. The meme stocks are going to be the first ones to die if there's a major market collapse. It's like, those movies where the black guy always dies first. Well, the meme stocks, unfortunately, are kind of like the black guy of the stock market, where, those meme stocks are bubbles waiting to pop. And so if you're a big owner in things like Dogecoin and AMC and all that, that's fine. Just know, remember, it's a game. It's like fun. But just know that when it really gets real, you're going to probably have some real problems in those stocks. I wouldn't be surprised if those stocks collapse completely. Now, another thing that some people do is they buy maybe some defensive plays, some defensive stocks. A couple I've seen mentioned are companies like Citigroup or United Health Group. Those are known as a couple of good defensive stocks. Utilities. Companies that are flights to quality, just solid companies that are high quality, heavy cash flow generating companies like Coca-Cola. Coca-Cola ain't really going nowhere. Coca-Cola is going to sell bottles of Coke under any economic circumstances. They're not a company that's going to grow by leaps and bounds. They grow incrementally. Their cash flow is strong. They got a dividend and all this other stuff. So companies like that, those that are at the top of the food chain. Remember, the companies at the top of the food chain always eat first, even if everybody's starving. So that might be where you want to go. You might want to search for that economic high ground. Another thing some people are doing is maybe putting like stop loss orders on their portfolios, where they have something there that says, look, if my stock drops below a certain amount, go ahead and sell it, get me out of my position. And you can set that on autopilot if you want to protect your gains. They also have trailing stop loss orders. If you don't know what all that means and stuff, just log in at the blackstockmarketprogram.com. There's a whole training on all this stuff that you guys can go through. And I know you guys like to come to the Tuesday sessions, but the bulk of the meat of the class is really all inside the system. So log in at the blackstockmarketprogram.com. Not only is there training on all the terminology you need to know, but also there's a set of questions and I'm sorry, not questions. I'm sorry, scratch that. A set of stock picks that I picked for this week in terms of stocks that I personally bought, and I have that for every week. So go back every single week if you want to, and I would just look at all of them. They're all chosen for a specific reason. I have a process I go through where I use this process. It's 11 steps I go through, questions I ask myself to decide if a certain stock is right for my portfolio. So log in at the blackstockmarketprogram.com and you can take a look at all of that, and it's right there for you. Okay, so the next question is from Terrence Williams. He says, As the big pharma companies lose some of their stock value as the pandemic wanes, is it still a good idea to hold long-term investments in these companies, Moderna, Pfizer, etc.? I personally believe that that big pharma knows how to make its money. And when people talk about what's going on with the pandemic, I'll admit my bias. My bias is that I don't have a lot of trust in the government because I just don't see. I just really even the thing going on in Afghanistan is another reminder that the U.S. government changes its mind a lot and doesn't always think long term in its decision making. Right? All those people died in Kabul because they believed in the U.S. government, and the U.S. government said, hey, we decided that we don't want to do this anymore, so we're about to bounce out. So good luck to you and your family. This has happened many times in history. It happened in Vietnam. It's happened in Nicaragua. It's happened all around the world where people died because the U.S. government made a promise that it did not keep. So that leads to an honest skepticism that I think a lot of us can have about whether or not the government has your best interest at heart. But one thing to remember too is when you talk about this pandemic, not only is it logical in my view to have some concern about big pharma, about the government, but I would also have concerns about big pharma. I don't know if big pharma can be trusted, and let me explain why. There, before this happened, before the pandemic occurred, and billions, probably $100 billion has been made by different pharmaceutical companies with different responses to the pandemic, right? And but remember, before this, there was the whole opioid crisis, right? And what was that? Well, that was a situation where they realized, hey, we've got this really amazing, highly addictive product that's going to make people feel good, and we can get doctors to prescribe it. There aren't nearly as many regulations as there should be on the conditions under which doctors can prescribe or the manner by which we can go about getting doctors to do this, right? So they would send doctors on vacations and give them all these special perks and bonuses to prescribe this medication. Well, then you saw what happened. You saw that the opioid crisis occurred. This all came from big pharma, driven mainly by the fact that America has a little bit too much of a commitment to capitalism, right? So when I see what's happening with the pandemic, I see this as the perfect money-making opportunity for big pharma because you've got this product that is mandated by the government, which is probably the next best thing to being addictive. The only thing better than a federally required product might be one that's addictive. I don't know which one's better. I don't know if it's better to have the law force everybody to buy your product or take it, right? Even if the government's paying for it with taxpayer money, or just have people addicted, right? That's why crack was such a big boom. That's why you had the dope dealers with the big, gigantic 80-pound gold chains and Mercedes Benzes and all that, because they had a highly addictive product. The consumer was in a position where they could not make a choice as to whether or not they were going to continue to pay your price. So from an economic theory standpoint, that creates incredible demand. Also, it creates what is called price inelasticity, which means that even if I increase the price, you're still going to buy it because if I'm serving these fiends, they're going to show up no matter what price I put on the product. So big pharma is in the same position that Wesley Snipes was in New Jack City. Nino Brown, right? They're kind of the Nino Browns right now who are controlling this industry, and so they have every single economic incentive imaginable to find another reason to give you something else in response to the pandemic, right? To give you something else that's going to make you feel better. Maybe not so much make you feel good, but make you feel safe, which is just like making you feel good, right? So opioids made you feel good, whereas this makes you feel safe. But either way, it's about sort of being able to offer you something that is that engages in enough emotional manipulation to keep you coming back, right? So now that I've done this thing, I now feel safer and protected. And maybe you really are. I'm not saying that you're not. I'm not here to debate about whether or not those shots are good for you or bad for you. That's something for you to decide on your own. All I can say is that there are some people that you can trust, some people you can't. And I think the pharmaceutical industry can be trusted to make money, right? They can be trusted to do what's best for themselves, right? And but if you're looking for somebody that you can trust to tell you what's really going to be best for you and your family, you might want to go talk to somebody else who doesn't have an economic incentive to give you a specific answer. So with that being said, and to answer, I'm really answering that question. I think big pharma is going to keep making money from this. I really think that now that we're slowly but surely acknowledging that that this virus is a lot like the way AIDS was. When AIDS first came out, Dr. Fauci and his crew were kind of working on that, and they thought that they would just come up with a vaccine that was going to fix everything and make it better. And I think it was really crazy. The pharmaceutical companies had everybody taking AZT. Anybody remember that? They were all taking. A lot of the patients were taking AZT, and the doctors were trying to tell them this drug is killing our patients. Like, this drug is not helping them at all. It's killing them, and nobody would listen because the money's loud. When the money's loud, people can't hear. They're like, "Well, I can't hear you." What? The drug is killing you. What? What'd you say? I can't. The drug is killing them. Right? They weren't hearing that because it wasn't consistent with what everybody was trying to do. And when there's that cloud of uncertainty, the capitalists are typically going to kind of push their way to the front of the line. So after pushing AZT for a long time and making billions of dollars doing that, after doing this massive push for a vaccine, and because we believe that we're God, we believe we can just come up with a vaccine for anything in a matter of months, none of that worked. But yet all that money was made, right? They didn't have to give that money back. They just it was like on to the next one, right? So I personally think that as you're sort of processing what's happening now, I would process it in the context of looking at history and just making sure that you're kind of aware of what you're seeing. So I think big pharma is going to keep making their money. That's my point. If you own Moderna, own Pfizer, all that, I don't think they're significantly overpriced. If there is a market decline, those might be good companies to grab onto. I don't think that the fear of this virus is going to go away anytime soon, and they profit from fear. So putting the ethics to the side, if you just don't care and you just want to have your money where you think it's going to do well for you, I think the pharmaceutical industry has always been a consistent winner. That whole industry, the healthcare, pharmaceuticals, all that is a multi-billion-dollar economic machine that roars on to eternity. It's never going to stop. So if you want to know what I'm doing, I own all those companies, and I'm going to keep owning them, and I may buy more of them if there's a market decline because I think they know how to make money. So anyway, all right. So let me see here. All right, so let me talk to you guys about real quick about the what's going on with the market right now. So I mentioned to you guys that the Dow just erased a big jump. It went up 343 points this morning, and then it went down and turned red. The chairman of the Fed is supposed to speak today. Let's see. I think he speaks. I'm looking for the time. I don't see the time. Let me see. I'm looking here at CNBC. Overnight, the Asian markets were pretty stable, which is a big deal. A lot of the reason that you saw the big drop yesterday was driven by what was going on in China. China's been the culprit of a lot of really bad outcomes, in the markets lately. There's a big concern that companies like Evergrande, which is the big real estate developer, that they're not going to be able to pay their debts. Well, the reason that you have this contagion where that problems in China can affect you is because they borrowed money from banks. Some of these banks have connections to the United States. So if Peter can't pay Paul, then Paul can't pay his debts to John. And John, if Peter can't pay Paul, who can't pay John, then John can't pay Billy, right? And all this, all this eventually will get back to Jesus because Jesus loaned money to all of them, right? Or whatever, right? It's a domino effect. So effectively, that's what you're looking at here in this situation. So also, let me see. They said that. So someone here says there's already been a sharp bounce off Monday's intraday low, and the catalysts for the correction have yet to be resolved. So we would expect a bit more indigestion and begin adding risk back into the economy on any further weakness on the bottoming as the bottoming process begins. Okay. Let's see. This is according to a guy named Tom Dwyer, who's a market strategist. So what I'm gathering from Tom's statement is that you should expect more volatility in the next few days. He says, let's see, begin adding risk back into the market on any further weakness as the bottoming process begins. So he thinks we're going toward a bottoming process. And a lot of these individuals will probably tell you long-term that it's always good to buy the dip. The question they always run into is, well, what does it mean to hit the bottom though? Like if you're buying the dip, what if you buy the dip, but that's not the lowest dip, right? Let's say it drops 5%. So you start buying, but then it drops 10%, it drops 20%, 30%. Well, what I tend to do, honestly, is overall across the board, I just tend to keep buying dips If you dip 5%, I buy. If you dip 10%, I buy more. If you dip 20%, I'll keep buying. Because long term, if you have a broad basket of stocks, not one individual stock, some stocks go down and they never come up. Some stocks dip and they stay down for 5 years, or they just disappear. The company goes bankrupt. But a broad portfolio, there's never been a healthily diversified portfolio of stocks where every single stock in that portfolio went bankrupt. Never. And when I say healthily diversified, I'm talking about 20, 30 stocks, in a specific industry, mutual funds, things like that. Those don't go bankrupt. When people go bankrupt, typically, like if you hear about an athlete that goes bankrupt and loses all his money, it's usually because he put all his money in one place. So if you spread your money out, you're usually going to be okay. So I just like to keep buying the dips, and as it keeps dipping, I just take my income and keep putting money in there. And that's kind of a good way to sort of build wealth. It's just getting the habit of, if you have a little extra money, the same way you might spend a little money, buying, food, or buying, a cup of coffee or whatever, just put that little bit of extra money in the market consistently. And overall, no matter what the dip is, this too shall pass. The average bear market lasts about 14 months. The pandemic bear market was an easy ride for you because it lasted about 3 weeks. Literally, remember when the pandemic began, you can go back and look at some of the conversations we had at that time. I remember saying, look, I don't know what's going to happen, but I'm going to buy. I'm going to buy the dip. And literally, it only took 2 or 3 weeks. I thought it might take a year before we start seeing the benefits of that strategy. It took about 2 weeks. And a lot of you were making a lot of money really, really fast. And it became a really exciting time to be an investor. About 1/4 of all investors have only been investing for less than 2 years. And that's a reflection of the fact that the pandemic was a great time to invest. Now things might move a little bit slower, but the same dynamic does tend to apply historically in the market. So I wouldn't, if you can look past the short-term stuff, then there's a good chance you're going to be okay. All right. So let me see here. They said also Tuesday's comeback was broad but slight in magnitude, with most major stocks inching only slightly higher. Uber jumped 6%. I don't know exactly why. I'll research that later. Energy stocks jumped as oil snapped back after selling off Monday, as the China property market situation caused concerns about overall global growth. So the price of oil tends to drop when overall economic growth drops. Also, they said investors are looking for more information from Fed Chairman Jerome Powell Tuesday about the central bank's plans to taper its bond buying, specifically when that will happen. So right now, as I mentioned to you before, and I'll just say this again briefly, the Federal Reserve has been largely responsible for this crazy market. They have really thrown tons of money out there. I went to eat yesterday. I went to eat with my son. We went to what was it? Cheesecake Factory. And at Cheesecake Factory, the guy came, first thing he told us was, he said, we have a limited menu. And I said, really? You have a limited menu? What's going on? He said, we cannot find workers, so we have to shut down half the restaurant because we don't have enough people to work. So that's one of the more interesting things happening in the economy, is that the Fed did such a good job of providing such a great safety net that literally there is no there are no workers for a lot of these companies. So that's something that's kind of going on now, which would be really interesting. But once the Fed slows down and stops, supporting financial markets, the rich will kind of be hurt a little bit from that. I don't want to say hurt, but you're not going to benefit as much. You are the rich, by the way, because you're acting rich, right? So if you're not rich now, your children will probably be rich because you're doing the things that rich people do. The fact that you're investing means that you're already behaving like rich people, which means you're eventually going to become one of them. So people like you and I are going to not benefit as much because the Fed's going to stop dumping money into the markets to prop up prices. So you got to be ready for that. Also, a lot of these unemployment programs, things like that, have come to an end. And so pretty soon we'll be back to business as usual. Also, let's see here. They said, so I mentioned to you China and Evergrande and what was going on with that. And let me see here. They said September is a historically volatile month for stocks, and after the S&P 500's 16% rally year to date, many investors have said the market is due for a pullback. So September came. Everybody expected September to be crazy. It became crazy. So now people are saying, oh, there goes crazy September. It's a self-fulfilling prophecy. And so a lot of people have been expecting the market to kind of dip anyway. And then, of course, you got this little thing called the Delta variant. I still don't know exactly what that looks like and what that means overall for the market. So it's just, no one really knows for sure. I mean, everybody has different assessments of the Delta variant, and I just enjoy watching all the political back and forth and kind of learning from all that. All right, so let me read a couple more of your questions here. Let me see here. Put your questions in the Q&A section if you're logged in at the blackstockmarketprogram.com. I can see your questions in the Q&A section. If they're in the chat, I may not see it. All right, so Lewis Goldsmith says, good morning, Dr. Watkins. I hope you're doing well. What was the name of the index funds that you mentioned on the stock market investing class last Tuesday? Index funds. You know what? I wish I could say I remember, Lewis. I can't even remember. I say so much stuff. I'm so sorry. I believe it was Stryker. Oh, you mean CrowdStrike? CrowdStrike was a stock, but I don't know anything called Stryker. But I want to make sure you said you can invest in the funds and do not check it regularly and would be surprised at the amount of money you have made over time. Gosh, Lewis, I don't, that part I don't remember, brother. I maybe if you ask the question again in a more specific way, I can remember. I don't remember that part. I apologize for that. Marlon, Spider. Yeah, well, the S&P 500 Spider, SPYDER, or sorry, SPY, I think is the ticker symbol. That's a pretty good investment in my view, long term. Like if you want to do something really good for your kids, maybe look at the S&P 500 Spider and invest a little bit in there every week. Set it on autopilot so that every week a little bit of money goes into the Spider, and then over time your child, they won't have any financial problems. Like any parent right here that's listening right now, that I put it on everything I love. If you have a child that's like under the age of 10 and you start putting some small amount of money on autopilot into like, I say the S&P 500 Spider, but you can do it in a lot of different index funds, but I'll use that as an example. And you set that consistently and you don't touch that money and you just let it grow and you add it every week, your child probably won't have any financial problems, assuming that they're not just, they don't grow up into a complete idiot and do something crazy with their money, which is another reason why you may not even want to give them all the money until they're probably about 30 years old. A child's brain is not fully developed until they're 25, but even at 25 years old, I was kind of an idiot and a little bit impulsive. And so if somebody really wanted to set a great table for me, if they'd put maybe, $30 a week into an S&P 500 Spider since I was 5, I would have had, a lot of money, maybe over $100,000, $200,000 available to me after the age of 25 or 30. So, I would encourage you to do that. That should be kind of a habit that you have that's as important as feeding your child every day. You got to feed them financially so you're not throwing them out to the wolves and throwing them out into a really economically competitive world without any preparation, right? Any preparation, any protection, any assets. When you don't have that, when you don't have any assets to protect you, you have to sell yourself into slavery. That's why you get those jobs and you hate your job and you hate going to work every day. And no matter what the abuse is, you still keep coming back because nobody ever gave you assets to protect yourself. So the only asset you have is your body. The only thing you can sell is your body. Like, no, kind of similar to a prostitute, yes, because your body and your labor is what you call human capital. That's the capital God gave you. So because you have no other capital base, right? There's other capital someone could have left you, right? Real estate is capital. Stocks and bonds is capital. Cash is capital. A family business is capital. But because you have no other forms of capital in those other areas, you only have what your ancestors had during slavery, which is human capital. And the difference now is that instead of someone else selling you into slavery, you have to sell yourself into slavery. But I would argue that a parent who doesn't prepare their child to protect them against slavery, that you're kind of selling your child into slavery. You're raising your daughter to become a prostitute because you've never shown her any other way to make money. So when I raise my daughters, I talk to them extensively about all the forms of capital, all the ways to have their own money so that they'll never have to sell their body to get money. So that if you decide you want to date a man, it'll be because you like him and you want to be around him. It won't be because you got to find a way to pay the rent. Right. So, so that's just a thought. I hope that helps some of you. I'd hope so. I hope it changes somebody's life. All right. So Marlon Easton, should you buy a full stock or fractional shares of stock? Doesn't make any difference. It really makes no difference. The only difference is like maybe your ego, right? You kind of feel like if you buy the whole stock, you feel better. But really, even a fractional share gives you the same effect as owning the whole share. And some companies are so expensive that it's damn near like buying Bitcoin. I think Amazon trades for $3,500 a share. So it's really hard to buy a share of Amazon, right? So, but you can get on your Cash App or your Robinhood, all that, and buy like a piece of Amazon, or you can buy a share of a mutual fund that owns Amazon, right? So there's a lot of different ways to get in on Amazon that doesn't involve actually buying a whole share, right? So think of stocks like Bitcoin. It's the exact same idea. Anisha, look at the Black community and ask, which are we, the players or the consumer? For the most part, Anisha, I would say that obviously, a lot of us are in the consumer space. We're not the producers. We're not the power brokers. We don't sort of control all this. We are products of our environment. Instead of realizing that, when you really tap into the power of God and you really understand the power that you have, just as a human being, as a Black person, etc. You can get to the point where your environment becomes a product of you, right? And what I'm encouraging everybody to understand is that, sure, in these bigger systems, sometimes we are products of that environment, but in your house, that environment is a product of you. If your kids grow up and they're raggedy and they're stupid and they're doing crazy things, well, that's kind of a little bit of a product of you, right? It doesn't. I'm not making fun of anybody. We all got kids that do stupid stuff sometimes, but you have to sort of look back and say, okay, in this space, I control this space. When I'm in my house, there's not much white supremacy in my house. Maybe there's a little bit that trickles in, like my kids will come home and say, repeat crazy stuff that they heard at school, and I had to correct it, right? But for the most part, that's my space. That environment is a product of us, right? So ultimately, I encourage you to find the spaces that you can control and really making sure that what comes out of that space is a product of you. And in the areas you might want to focus your energy to make it real simple for yourself is every single day, if you really want to be conscious and you really want to be, focused in terms of understanding what's happening in the world and woke, so to speak, maybe every day or every week, focus on three key areas: health, wealth, and relationships. Those are three things: health, wealth, and relationships. So ask yourself, what is the physical and mental health of the people in this space? Are we creating a space that creates good, positive mental health? Or is it a space where there's just trauma on top of drama and trauma, right? Which tend to go hand in hand, right? Physical health, in terms of what we eat and what we do with our bodies, exercise, all that stuff, right? Taking your vitamins every day. Are we creating good physical health? Wealth. Are we building wealth, or are we leaking wealth, or are we just not even conscious of wealth, right? Because if you're busy playing strugglenomics and survivalnomics, it's very hard to play powernomics. Powernomics is playing above the rim, whereas strugglenomics is where you're trying to keep your head above water. And a lot of us are trained to play strugglenomics because we grew up watching Good Times. Remember, keeping your head above water, making a wave when you can, temporary layoffs, Good Times, easy credit ripoffs, Good Times, right? So basically, we're used to that whole, struggling and surviving kind of thing, right? Temporary layoffs. We're all used to being employees. Easy credit ripoffs, right? Where that's a consumer culture. That's speaking to the consumer culture. And I can keep going down the list. I don't remember all the words to the Good Time song, but it's all about strugglenomics. And so when it comes to that wealth, I would kind of say, okay, how do we deal with the strugglenomics so we can get to the powernomics? So are we conscious about, the number of revenue streams that we have in the house? How do we build another one? How do we come together as a family and build a family business or something that's going to create another revenue stream? Also thinking about, what happens with those revenue streams when that money comes through the door? Do we actually even have an income? Julian Gordon makes a great point. Julian Gordon is our dean of real estate in the Black Business School, who's a brilliant brother, and I love this guy. And he said that something really funny, where he said that he said companies' income is measured by the revenue minus the expenses, right? So you take revenue, subtract expenses, and that difference is the income. So if you are a person where your expenses matches your revenue, like the money you bring in is exactly equal to the money that goes out, then you have no income, right? You literally aren't moving forward. You're literally the hamster that's really running on the wheel, and you're running really hard and you're really tired, but you're not going anywhere, right? So ultimately, that wealth piece, it requires a conscious commitment to learning and understanding. The average person spends 2 hours a month studying wealth building. The average millionaire spends 20 hours a month studying wealth building. So being conscious of how much time you're spending studying wealth building is a great way to start. And then the last piece is relationships. If you can't get along with each other, then everything that you build is going to fall apart. The ability to simply connect and to be good to each other and to support each other and to work together and to build together and to do things together enhances your ability to survive. It enhances your ability to prosper. Even animals understand this. That's why you see animals, they tend to move, a lot of them move in packs. And they never learned how to do this. Nobody taught them how to do this. They didn't go to college. They just instinctually know that we are stronger together, right? So Black people, you are stronger together. At the All Black National Convention, our number one goal is to reiterate to you that you're stronger together and to bring you together, right? But in order for you to be together, you have to be in a situation where you're not allergic to each other. You're not infecting each other with trauma. You're not harming each other, right? So if you bring people together and there's a virus and everybody's infecting each other with the virus, then what do you have to do? You have to socially distance. So a lot of Black people socially distance from their own damn parents because they're toxic. They socially distance from their husband or wife, which breaks up the family. They socially distance from their siblings, which kills the potential of any possibility you might have had to build something together. So you have to sort of learn how to fix that. And that's why little things like when you have all these therapists out here screaming and hollering at the top of their lungs that Black people need therapy, I would say every single person listening right now, get you some damn therapy. Because if you're Black like me and you've gone through the same world that I live in, you're probably messed up in ways that you don't even know. And it's probably affecting every aspect of your life in ways you're not even aware. The subconscious mind is a dirty little devil. The people that understand it, they use it to manipulate the hell out of you through propaganda, through marketing techniques, through subliminal messages, through the music. And so if you're not aware of that, again, we're talking about the word consciousness. We're talking about the word woke, right? If you're not woke enough to realize that you're asleep, then you're just going to stay asleep and you're going to continuously get victimized. So don't stay asleep, get woke, have that consciousness to be aware that your subconscious mind has probably been manipulated in some way you're not even aware of. And a therapist, a good therapist, might be the first person that can help you do that. There are tons of good Black therapists out here who get no attention, because they're posting stuff on Instagram, and because it doesn't come with a big booty attached, nobody's paying attention. Well, I encourage you to be very conscious, be very aware of who you're paying attention to on Instagram. Hit the damn like button when you see the therapist post something that's healthy. Make a little comment, give them some SEO support. Go ahead and invest in their service, because I'm telling you, everybody needs therapy, including me. We all do. My father that raised me was a great man, but because he was a Vietnam vet who was traumatized from the Vietnam War and overcame a heroin addiction, and he was a police officer, sometimes he could be a little mean. That was very traumatic for me. My biological father was not even there because he was in prison for drugs, right? And I could keep going down the list of all the weird things that happened in my little old life that affected me, right? And so everybody in here probably needs some kind of therapy. And I'm telling you, that type of stuff helps you deal with the nonsense that you see around you. And why am I going on this tirade about this topic? Well, because that's the first step toward being able to come together and build together and overcome your BS. Most people can't accomplish their goals economically because either they're getting in their own way, like you are your own biggest hater, you are your own biggest adversary, you are the person who is consistently destroying your life, or you got relatives who ain't there yet either, who are just making it harder for you every step of the way, right? All those things can be healed with therapy. So I'm a big fan of individual therapy. I'm a big fan of relationship therapy. I'm a big fan of family therapy. I'm a big fan of group therapy. If you form an investment club, you might even have a therapist come through who can talk to the club about how you can engage with one another in a productive way that creates building as opposed to toxic, harmful situations, right? All this stuff, right? So that's my 2 cents. And at the All Black National Convention, actually, we've got a long list of therapists, right? Starting with my wife, but there's some other great people, Dr. Adrian Carter, Dr. Charm, and a few others that are coming through that are literally, their number one goal is to help us to develop the right mental health as a community so that we can build things together. Okay. So anyway, and the URL is allblacknationalconvention.com. If you want to learn more, it's at the end of October 29th through November 1st. So I hope you guys will come out, because I guarantee you won't regret it. I guarantee you. I don't see any other conferences that do what we're doing at the convention, and it's independent. So there's no corporation that's going to tell us what to say, no bank, no government entity, nobody. All right. So anyway, let me look at your question, Clarissa. Clarissa says, think we should have an advantage of investing yesterday. You mean would investing yesterday have been an advantage? I guess if that's what you're saying, Clarissa. I don't know. I mean, I invested yesterday because I did see the dip, and I tend to invest when the market declines. But then again, I invest all the time, because when I have income, it's like investing. It's like spending. It's like spending to me, right? If I get money, say, what am I going to do with this money? Well, I'm not going to go and buy a new pair of shoes or a new outfit. I'm going to just invest it, right? So I think investing yesterday was fine. I think investing today is fine. If you did nothing, that's fine too. If you want to look the other way and then peek back in on your stock a couple months from now, there's some people who handle it that way. You don't have to follow these temporary fluctuations. I want to reiterate that part. You don't have to feel like you've got to sort of be on top of every little thing that's happening in the market. A lot of this, to some extent, is it's a step away from being entertainment. To be honest with you, it's entertainment and it's training, right? It's an opportunity for me to come in and tell you what's happening. So in the context of me describing to you what's happening, you're going to learn what dynamics tend to move the markets. So right now, what you're seeing is that wall of worry, that set of risk factors where, it's kind of, I don't know, just to give you a stupid analogy, it's like if you're watching a movie, or better yet, not even